One of the common issues that we deal with in bankruptcy deals with the dischargeability of federal income tax liabilities. Most people come into the office believing that, well, if it's a federal income tax liability, that it is not dischargeable. And that is not correct. As a very simplified rule, we say that if the tax liability is old, it's dischargeable. If it's new, it's not dischargeable. Well, that then begs the question, what constitutes an old tax liability? This is an area that can get very complicated, so I'm just giving you a general overview here. But generally, you can say that if it is A, more than 3 years from the year in which the tax liability accrued. For instance, if I have a tax liability for the year 2007, now I didn't file that tax return until April of 2008, but the year in which the tax liability accrued was 2007. So has it been more than 3 years since the year that the tax liability accrued? The second criteria, has it been more than 2 years since that tax return was filed, or since the tax in question was assessed? So what does all that mean? The first part of it's pretty easy. Has it been more than 2 years since the tax return was filed? Let's use the same example. I worked in 2007, and in April of 2008, I filed my 2007 tax return. It's now, let's say, September of 2012. Well, it's been way more than 2 years since I filed the tax return. So I meet both the 3-year requirement since the liability was accrued and more than 2 years since the tax return was filed. Now, what about that other part where we talked about 2 years since the tax was assessed? Well, let's say I filed that tax return in April of 2008, but in the end of 2010, I get a letter from the IRS that says, well, we've reviewed your tax return and you listed that you owed us $1,000, but we've redone your return, you owe us $10,000. So the date of that letter is the date of the assessment. So if I got that letter, let's say, in December of 2010, and it's now September of 2012, it has not been 2 years since the tax was assessed. So I need to wait to file that bankruptcy petition until it has been more than 2 years since the date of the assessment letter. And one last little proviso there. When we talk about assessments, that does not include the adding on of penalties and interest as the tax liability continues to remain unpaid. It is the assessment of the original tax itself, not penalties and interest. So that is a general overview of when taxes can be dischargeable. The other thing to remember in dealing with tax dischargeability is that it requires a separate action. Taxes are not automatically discharged in the bankruptcy. We've had many people come into our office and say, well, I filed bankruptcy a year ago or 2 years ago or 3 years ago, and now the IRS is coming to try to collect money, and I listed that debt in my bankruptcy, so it should be discharged. Rude awakening is that it was not discharged, because in order to get rid of an otherwise dischargeable tax liability, you have to file a separate action called an adversary proceeding in order to have the bankruptcy court specifically rule that, yes, that tax liability was dischargeable. And if you don't go through that process, it's not going to be discharged, even though it could have been.